Oh, it's showtime. It's live stream Tuesday from once again a rainy and somewhat dark North Carolina. And in this live stream, we are going to talk about something that, in hindsight, everyone is going to be like, I wish I'd listened. I wish I'd listened. I wish I'd acted. I coulda, I shoulda, I woulda. Has to do with Bitcoin. This is big. And it's sort of like this, like in all the big events. I mean, if you could have known ahead of time, if you could have known ahead of time, what would you have done? What could you have done? Because if what I'm saying is going to unfold, it's going to change the world. There's no way that it doesn't change the world. So in this live stream, I'm going to talk about something that I've talked about a lot before on this channel, in my Substacks on ATG Digital, here and there on the Ballman Speculating podcast, definitely in all of my updates. Why? Well, because I don't think you get too many chances at something this big that often. And the hesitation to act is always there because, of course, we want to know, like, well, we want to act after the event has happened, but get the prices before the event. And you can't have it. You have to go forward without perfect knowledge. You have to go forward without knowing for sure that it's going to happen. And then, I mean, once it happens, you can't go backwards. So there's risk, there's reward, there's uncertainty, there's some doubt that's there. I'm going to go into all of that. It has to do with Bitcoin. I'm going to lay out why it's getting late. It's getting late for everything that I believe is going to unfold. We've got so much going on in the world, and yet everything is sort of like this like eerie calm, uncanny calm. It's not going to last, but we don't know where the calm is going to be disrupted. If my experience is any indication, it's going to come in a place to really where the least number of people are prepared for it. And in this live stream, I'm going to lay out my thesis, my theory, my belief, my view of all of this. But before I do all of that, I'm going to do the legal disclaimer and disclosure, which is that this live stream and the content from ATG Digital Media is not investment or financial advice. It is presented to you as opinion, information, engagement, and entertainment. All ATG Digital may contain errors, oversights, and mistakes. We are imperfect human beings, and that's, comes with the territory. Understand that investment operations have significant risks and can lead to the loss of your principal. Investment operations means buying or selling a stock, crypto, options. The owners, employees, contractors own, trade, and transact in securities that are mentioned in this video and all content from ATG Digital Media. We do not take money from companies or from crypto founders, promoters to recommend their stocks and crypto tokens. For better and for worse, everything that you hear, see, read from ATG Digital Media is our own independent opinion. This is a listing of all of the free content that we put out. The Substack goes out daily. The Ballman Speculating podcast is intermittent. And YouTube, I am here weekly. Social media, I am on X all the time, tweeting sometimes about companies, mostly macro, sometimes some long pieces that sort of like form the basis of some of the things I talk about on YouTube. And then quick plug, if you're looking for the paid version of what you see on YouTube or on all of our social media, which is what? Well, model portfolios, updates that go out on a semi-regular basis. atgdigital.media, that is the actual website. Subscriptions begin at $9.99 per month. Okay, so the basis of this live stream is really a Substack that I wrote yesterday. And it comes from having sat and researched Bitcoin all this weekend and just looking at patterns of price behavior. And one of the things that I started to think about is my first real big impression that Bitcoin left on me, and that was in 2017. I was 1 year into being at Banyan Hill, and Bitcoin at that point was still like, a very much like it is today, but in a different level, a very outsider, unusual, weird, strange, unusual kind of asset. And I remember that we had a number of the team sort of like visiting me in Durham from Banyan Hill, the management team. And Bitcoin was just suddenly flying high. Like, I mean, as I lay out in this Substack, I go through like 2017. Um, 2017, like, yeah, I mean, it starts in the beginning of that year, where Bitcoin is what? Yeah, at $740 at the low. Yeah, so then we go January, February, March to 1,330, doubles by March. Then we get a dip. Um, and then in April, another high, 1,400 again. Then in May, essentially a double. I mean, we were talking about something just doubling like that, right? I mean, it is very, very unusual, to see that kind of price behavior. And I remember myself, and I admitted in the Substack at the time, I didn't really understand Bitcoin. And not only was I sort of like dismissive, I was sort of scornful. I was like, yeah, this is like, this is just another bubble. This is like nothing. And in fact, I went on YouTube later on in 2018, somewhere near the top, and said, hey, you should sell. But truthfully, I'll admit, I'll say that was just pure luck. Later on, I changed my mind, and at about what, 3,000, somewhere between 3 and 4,000, I said, this is the bottom. This is the future of money. And I think that's the bottom. Now, many years out, it's 7 years out. I'm obviously personally very invested in Bitcoin. ATG Digital, we have actually put 30% of our cash reserves into Bitcoin. And I expect something like 2017 to come again. And look at this in 2017. Look at this, right? I mean, by August, I mean, we're talking about a price where we're at $740 at the low in January. By August, it's 4,765. By October, it's 6,500. And anyone that thought like, oh, I'll short it at 5,000 because that's a psychological threshold. Well, yeah, well, you got crushed if you did that. And then November, 11,400. And then by December, as you can see, each of those green levels is a $1,000 push. $1,000 push. Obviously up and down. That's the nature of all investment prices, up and down. And in this Substack, I'm like, well, why am I recounting 2017? Obviously, I didn't benefit from 2017 because I was out. I mean, and truthfully, I remember just being actually like, I was like, thinking that this was wrong. It's not going to work out, all these things. But having now researched Bitcoin for so many years, yeah, I mean, 2017 wasn't an anomaly. That was the central realization that I came to, which is that it was an anomaly. And in fact, if you go back and research backward in time, and look at this chart. Now, I have no way to make this better, but this is the 2017 run. I mean, that's extraordinary. But if you go back, and this is the most complete price chart that I can find for Bitcoin, what you will see if you go back in time to, essentially all the exponent numbers. What is an exponent number? In other words, the first time Bitcoin gets to $1, like that was in 2011, well, it also gets to $10. In other words, it adds an exponent, which is a zero, in the same year. And then when you push out to 2013 here, where it's still, not yet, it's still holding on to the 10 exponent, and then you get to $100. In other words, these exponent pairs, 1 and 10, 10 and 100, occur after every halving, which is, if it happened once, I'll say chance. Happened twice, I'll be like, God lucky. Third time, I'm like, okay, for a mathematical algorithm driven asset, yeah, this is clearly something that is sort of like embedded or programmed in by function of the fact that so much of Bitcoin is pre-programmed. The total number of coins, 21 million, fixed, hard-coded in place. The new supply gets halved every 210,000 blocks, which approximates to about 4 years. But then, of course, in 2020, in the 2020 halving, which you can see here, we get to a high of 69,000 after the halving, and then it doesn't make $100,000. And at the time, truthfully, I wasn't aware of this exponent coupling patterning of 1 and 10, 10 and 100 happening in 2011. And then I think in 2014, it was 101,000. But I had to then be like, okay, well, why didn't it happen? And I think that one of the reasons it didn't happen is because, well, people started, I think there were enough people that were following this, and they were following a model that was called the stock to flow model. And the stock to flow model absolutely works on the mathematical idea of Bitcoin. And the stock to flow model indicated that it would get to $100,000, and it never did. And I think there were so many people that bet on the stock to flow model that as a result of it, there was, it's sort of like there was this enormous supply pressure on Bitcoin price, and it didn't happen. But in 2024, we don't have that. Because if you go on X and type in stock to flow, what you will get is a whole bunch of hate, because so many people were betting on stock to flow, model like prediction coming out, and it didn't happen, and they are pissed off. They're angry. They are hateful. There's a guy named Plan B on X who you can follow, who is the first one to popularize the stock to flow model on Bitcoin. And he gets just a lot of hate today. And people, were counting on it. Why? Well, because the stock to flow model had actually been a very good predictor of where Bitcoin is. So you don't have to, agree. I'm sure there's still plenty of hate still left for the stock to flow model, but I don't think the model's wrong. I think there's two things here. I'm going to show what the stock to flow model here, right? Okay, this is the stock to flow model. And you'll see here what I was telling you earlier, which is that you see the peak in the 2020 halvings. There was a halving in 2020. It should have been, I put that in air quotes, should have been $100,000. I can't tell if you can see what's showing up, but it should have been $100,000. And I think the reason is that so many people were betting on it. And then, this orange line, that's the stock to flow model sort of price prediction, but it's not like a market guarantee. That's the mathematical model, and that's driven off the supply and what is sort of like coded in to Bitcoin, which is 21 million coins, new supply halved every 210,000 blocks. But it doesn't anticipate how human beings will react to all of this. And one of the things that I know from being in markets for 30 years, which is that if everybody bets on the same thing at the same time, that thing will not happen. That thing will not happen. And that is what has unfolded. The second thing I'll say is that you can see that no one has a problem when the price of Bitcoin goes above the stock to flow model prediction. Like, I mean, here, it's going above, no one complains. But obviously we hate it when it goes underneath. But the truth is that it can obviously go above and it can obviously go below, which means that if you are a person that is sort of like thinking this through, which is that when you see it this far below, you might think like, okay, when it catches up, it's going to be a real banger, right? I mean, because we haven't even hit $100,000 yet. And each day that we don't have $100,000 Bitcoin, people get more and more skeptical. We've just had a mini crash where Bitcoin went from 70,000 to what? 49,000. And let's just say that if you monitor sentiment, meaning feeling about Bitcoin today, you don't get hate, but what you get is gloominess, apathy. People like, oh, that was then, forget all this. But look, folks, all of the evidence points to us going back to the stock to flow model. And that means that somewhere in the next, my modeling and forecast says October, November next year is the peak. We're going to get to, something like 1 million, 1.2 million. And if we do something like this, we jump above like we had in previous cycles. And each one of these, remember, is post to halving. I mean, this is very predictable here, right? I mean, these all happen post to halving. We're going to see, I don't know, 1.5 million? I mean, something like that. So most people, again, are going to be quite skeptical. Here's where we are. I mean, we're at 60, and I can anticipate what people's objections are going to be, which is that they're going to be like, well, Paul, it's not here yet. You've been saying this for a long time. People said this in 2020. You'll notice that all of these things either are something related to the emotion of the fact that it hasn't happened yet and people are disappointed. We're naturally impatient as a species, especially when it comes to money. Or else it's a recounting of the recent past where people lost money in the last cycle. So in other words, rather than looking forward, and when you look forward with Bitcoin, you always see the same thing, which is what? I mean, the supply gets cut every 210,000 blocks. The supply, the long-term supply never changes, $21 million. Then on the other side, you have to look at and be like, well, what feeds the Bitcoin machine, if you will? What feeds it? I don't know if you saw, but U.S. debt just hit what? Record of $35 trillion. $35 trillion, right? I mean, so $35 trillion is now like our debt. We are spending, I put up this X post. Let's see if I can get this up here. We are spending at a rate that is pretty wild. Look at this. I mean, our individual taxes account for less and less of whatever we are spending. And the money gets continually issued for all kinds of things. And that is the sort of like the source. That is the what is the right thing? The genesis of like a price lift in Bitcoin, which is that we are measuring Bitcoin not in Bitcoin terms. We measure it relative to something else. We can measure it. And the thing that pretty much everyone is measuring Bitcoin against is the world's most successful currency, the world's most valuable currency, the world's most desired fiat currency, anyway, which is the US dollar. So we are, if you think of this in this way, which is that you're in the Sahara Desert and you got a lot of sand, and then there's water. One is relatively unlimited, and one is very, very limited. And yeah, I mean, and before you're like, well, we're only going to count this much of the sand. And then you're like, well, this much more. Dollars are being issued like sand. I mean, we're at 35, 36 trillion in debt. Our deficit is wild. We have no plans of any kind to rein it in. We're all happy, comfortable in where we are. Nonetheless, the fact that this post is out, the fact that people are aware that, well, you can't continually just issue a currency or an asset into oblivion and expect to keep its value. So everyone gets that as a basic premise. So we have more dollars than ever that are out there. You can go and look at statistics. I won't put up any more statistics, which I've done this before, which is that we have issued more US dollars in the last 3 to 4 years, essentially post-pandemic, than we have in the prior, I don't know, you can pick your number, 5, 10, 15, 20, 30 years. We have issued an extraordinary amount, which is the reason why we've had this incredible inflation in 2020 and 2021. And while the inflation rate has tamped down to 2%, it's not like prices have gone back to 2019. I mean, and the likelihood of that is absolutely zero. Why? Because of this. I mean, we are spending money. We are pushing money into the economy, into the financial markets. And the only place that sort of like is sitting still, if you will, I mean, is as Bitcoin, because that irrespective of however high the Bitcoin price is, the amount of Bitcoin that is going to be issued never changes. It just simply sits still. There's pretty much no other asset that you can talk about where the supply of the asset does not respond to the price. In the case of pretty much every asset, as the price goes up, some more amount, some greater number is issued. So coming back to my story here on Bitcoin, which is that the parallels to 2016 and 2017, that halving cycle, are very, very uncanny in my judgment, which is that in the 2016 cycle, you had the first real, true, large buying that could happen. Why? Because by then, Coinbase and Kraken and Binance and KuCoin, and there were others, were all established around the world where you didn't have to go into a very weird website like Mt. Gox, and you could buy it, with some level of comfort. I truthfully wasn't even aware of Coinbase until 2018. So, I mean, I'm relatively informed. So it was still obviously quite small, but still relative to the 2013 cycle, when, I mean, people were still dealing in Bitcoin by like using zip drives and stuff like that. This was like of a much greater scale. And what does that remind you of? Well, for me, it reminds me of the Bitcoin ETFs. Like, I mean, if going into Coinbase and buying Bitcoin is way easier than, going on Craigslist and arranging to meet at Taco Bell to get your Bitcoin, or to go to a pretty shady exchange like Mt. Gox, which got hacked and all this stuff. Well, today you can go into your Fidelity account, you can go into pretty much most brokerages except for Vanguard and buy Bitcoin. So the access, the jump in access is the same. In 2016, 2013, and this entire period of time, what's the other background to Bitcoin? Well, it's this incredible unease about how our currency is being managed. Like, in other words, can we really issue unlimited amounts of currency and assume that it will hold its value? There must be some upper limit where people be like, no, no, like, okay, the value of this has to decline. And we obviously have seen that in 2021, where the value of dollars declined against food products, against washing machines, against cars, against houses, etc. And that's sort of stabilized now, but we have not sucked all that money back in. And increasingly, we can know by the fact that the the BRICS alliance, or whatever they're called, they want an alternative to the dollar. China has been selling down its US Treasury assets. People clearly are hungry for an alternative. In other words, you've got plenty of kindling that will go into this, which is really what feeds Bitcoin. And that's just the US dollar. I mean, if the US dollar is in bad shape, well, everything else is relatively worse shape. I mean, the US dollar is the standard around the world. What's going to happen if I'm right? Let's just say I'm right. Okay, people can be skeptical, and that's fine. But let's just model out the world in the Paul Mampilli sphere of thought. Let's say come September, October next year, Bitcoin is at $1 million, $1.1 million. Does the world just look the same as in 2024? I do not think so. It is going to be a COVID-like event. It is going to be an earth-shattering event. You will suddenly have Bitcoin be worth nearly $20 trillion. The exact number would be 19.68 trillion, which is the term which is the title that I used for this video. At $1 million, you suddenly have a completely shifted world. I mean, it will not make Bitcoin the world's most valued asset. It will be, above gold. It'll not be above, the bond markets of the world, but it would be a very, very valuable asset that would be incredibly disruptive. Suddenly, all the issues around unlimited issuance of currency become something that people can no longer ignore, have to be dealt with. And yeah, it's life is not going to go on. What is going to happen? Well, I mean, layer it through. I mean, if Bitcoin's at $1 million, what price is Ethereum? Well, if I were to model out my world, well, okay, Ethereum's last high was 4. I would venture it's probably somewhere between $15,000 and $20,000. Why? Well, because if Bitcoin is worth $1 million per coin, and you've created a $20 trillion universe, Ethereum's various DeFi solutions, there's money flooding in. People are borrowing, lending. Why? Because the value that you can borrow against has soared higher. And that'll then float down. I mean, will the trading volumes on Coinbase rocket higher? Absolutely. Will the trading volumes on Uniswap rocket higher? Absolutely. You are going to have an enormous domino effect that goes through the crypto markets, through all of the stocks that are in any way, shape, or form involved in crypto. Coinbase is an obvious one. Robinhood is an obvious one. Block is an obvious one. The crypto miner is an obvious one. MicroStrategy is an obvious one. It will change also what companies are willing to do. Suddenly, at $1 million, people who were previously skeptical will no longer be skeptical. As human beings, we are skeptical at low prices, and we are persuaded at high prices. A high price is the best form of argument and persuasion that we can find for any asset. You lift the price up and people's objections go away. So we are on the cusp, on the cusp of an enormous, enormous monetary event. People are focused on 2008 and revisualizing some form of 2008 again, and that's typical of how human beings analyze the world. We look at the most recent past and be like, well, that's going to happen again. So people are staring at real estate markets and be like, there is going to be a gigantic crash and it's going to take all these banks down. There's no real sign of that, folks. There's no, I mean, there's definitely signs in many markets where there is too much inventory at too high prices that there is going to be price weakness, but there is no systemic institutional player that is exposed to the real estate market like Lehman was, like Goldman was, like Morgan Stanley was, and the entire banking system was in 2008. So this is not on the cards. There's way too much money in the system for this to happen. Other threat scenarios that people try to think about, which are all in some way, shape, or form, which is that the stock market is going to crash. It's going to be like 2008. I mean, we're still within like the S&P 500 after the mini crash that we experienced last week is within 5-6% of the all-time high. Yeah, I mean, this is quite different than 2008. Yeah, we were, starting January and February of 2008, like, you just had like an enormous waterfall that, had these bounces as news started to come out that the banking system was incredibly overlevered and they had essentially involved themselves in a trade that half of them didn't seem to understand. We don't have any of that today. We don't have any. Instead, what we do have is this extraordinary imbalance within sort of like the currency system, right? Which is that we have an unlimited issuance of US dollars. We've had a pandemic that has caused essentially the finances pretty much of most governments around the world to just be completely whacked. And then we've got like this major new asset class of crypto, which has very different characteristics than anything that we've ever had in human history. What are these characteristics? Well, with Bitcoin, at least, it's absolute finite quantity. 21 million, that's it. Locked in. You can't increase it. There's no way. You cannot talk to the manager. There is no CEO of Bitcoin. There's nobody you can sit there and persuade and say, hey, we just need a little bit more to juice the liquidity of markets, to juice the economy. Nope. So that's one. That's big. Second, unlike old school legacy currencies or assets even, the blockchain allows for unparalleled transparency. You can see every Bitcoin when each block is actually issued, you can see it. It verifies every block that has been issued in the past, every time a new block. In other words, there's a level of transparency and knowledge that currently you don't have with any other asset type. Only crypto can provide you through a public blockchain. You can be like, yep, this is how many are issued. This is how many are in circulation. And this is where everything sits. Yeah, you've never had that in human history. Yeah. So this is a very new, unusual asset. And the idea that like the world is going to go on in the way that it was before, when this level of transparency is available, this level of accounting is available, this level of finiteness is available, yeah, that's a delusion. So in other words, whatever I'm saying, you might object to, well, Paul, 1 million's too high. Listen, folks, when a new invention comes, it's inevitable that it's going to disrupt the primary field, the primary area in which it is involved in. And what is Bitcoin? What is crypto involved in? Well, it's money, it's finance, it's banking, it's all of the above. And there's always some catalyzing moment that drives things forward. $1 million per Bitcoin is very symbolic, but it is not something that would necessarily destroy the world. It's not like if Bitcoin hit 1 million, somehow everything else, would just disappear. No. What it does is that it really shines a light on the fact that, whoa, there is a better way. There is a better system. There is a better technology than old school legacy based finance based on, a trust that is no longer earned. I mean, in the old way, like sort of like really, if you go back to the gold standards pre-fiat, there was a level of trust. In other words, when a dollar was issued, there was a backing of gold, but that's long gone. That's long gone. And instead, we just went to pure, unlimited issuance. And now we have, we've got Bitcoin, we have blockchain, we have crypto, and it is going to take share. And it's often some dramatic moment that flips it. Like, I mean, if you go back and have researched currency crises, I mean, after World War II, there was Bretton Woods 1, and then there was Bretton Woods 2. I don't think there's going to be a Bretton Woods for Bitcoin. Clearly, the central bankers of the world know that it is a clear and present danger to their monopoly on issuing in currency. But as much as anybody would like to kind of like tamp it down, to maybe destroy it, to kill it, you can kind of do it. Why? Because it can operate, somebody with like a hand cranked computer could be the last miner standing and can keep issuing Bitcoin. It is so widely distributed in terms of the production, new production, and the processing of it. It might get interrupted for a short period of time, but the moment that a computer can get cranked up, it would all sort of reconcile each other because the technology and the code is so elegant that it can do that. So the likelihood of like a non-disruption moment, in my opinion, is zero. We are not going to go on in the way that we are going on at present. In other words, unlimited issuance of currency, no accounting, no finiteness of any kind. In other words, money with no backing will just continue when we have a better alternative. I put down in my Substack that, in my opinion, the odds of this happening in the next 12 to 18 months is better than 50-50. The odds of this happening, I don't know, over a long-term time frame, in my judgment, is 100%. But between everything that's going on, we've obviously had the halving. We've obviously got the Bitcoin ETFs. We've got enormous dissatisfaction within our country, outside of our country, of the way our currency is being managed. When you have a dramatic illustration of that, which is that, our currency has lost actually its value, and it just, for whatever reason, we refuse to acknowledge it, refused to accept it. And then there's a dramatic illustration. What could be more dramatic than a cryptocurrency that was derided as being a scam, a joke, for criminals and for all this, they've thrown everything at it, has not been able to kill it. And that gets to $1 million. I think it's game over. It's game over. From there, essentially finance starts to walk over into the world of blockchain, into the world of crypto. And people are going to be like, that was so obvious. That was so clear. I should have been in. Like, I mean, it seemed so easy to understand, but it's always easiest to understand, of course, in hindsight. It's always easiest to understand in hindsight. Before the fact, what you have is questions, what you have is doubts, what you have is a lack of conviction. And so we don't act. Price is the critical thing. The thing is, to get the benefit, you got to act before. You got to act before. So that's where we are. I think we are on the precipice. We are on the cusp of a 2016, 2017 like move in Bitcoin, where we're going to have the exponent coupling re-happen again. We're going to see the stock to flow model essentially prove out that, yeah, I mean, because the supply conditions never change, only the demand conditions change relative to human feeling, human developments, whether it be the issuance of fiat currency. But because the Bitcoin underlying characteristics never change, we're going to revert. We're going to revert back to it. And that's right. We're going to see 100,000 come, I would say, by the end of this year. And then we'll see a million. And I would bet that being that like we've been underneath that stock to flow model number, we're going to go past it. It's going to be 1.3. It's going to be 1.4 million. And obviously with that, crypto goes on fire, Coinbase is on fire, MicroStrategy will just explode higher. So I don't know. I am incredibly excited, incredibly bullish for what I believe is going to unfold. I don't think that you will get too many chances in your life to participate in something as big as this. It's going to be huge. It's going to be absolutely massive. And in hindsight, it's going to be all so clear, so obvious. But once it happens, well, you can't walk backwards. You can't go back in time. So that's my live stream for today. Bitcoin, 19.68 trillion incoming. That would be the market capitalization of Bitcoin at $1 million. Here we'll do some questions. Raul, who's a regular live stream attendee, wants to know, T-Doc, can you explain why T-Doc will be huge in the next coming years? Yeah, I mean, I can't guarantee that Teladoc is the only one because Amazon is making moves in the digital health world. But Teladoc is still the largest network of doctors and patients involved in online health. We have a massive shortage of healthcare personnel, everything from doctors, physician's assistants, nurses, surgeons, and there is no way to increase the supply of doctors and medical personnel. There's just no way to do it. For one reason, we have a lot fewer people that are being born. So because of the fertility crisis, so there's just fewer people that are going to go into college and then go and study medicine. Plus it takes like a minimum of 4 to 7 years. I mean, to get through many of these fields. So we're going to have to find a way to implement technology to be able to take their skill sets and apply it to far more people at a much lower cost. And this is happening at the same time where societies around the world, including in the United States, are growing older. We're living longer and we're growing older. So we have reduced supply, enormous increase in demand, no way to really increase the supply. I mean, we can insist. I mean, I don't know if you've tried, but try getting an appointment on short notice for anything other than urgent care. Very, very difficult. Soon that will be, and not soon, I think it's still, I don't have any particularly complicated health problems, but many of you maybe can tell me. If you want surgery of various kinds, a few years ago, you would schedule it, and it would be maybe like a couple of weeks. Now it's in the months. How do you get around this like kind of like, it's not a crisis yet because nobody really is reporting on it, but it's like a mini crisis. You can't get care when you want it. And one of the things is to kind of like take out the smaller sort of like things that we do that we go to doctors for, occupy obviously their time, their effort, their resources. Those can be shifted online. And this is an inevitable shift, no different, at least in my judgment, than online shopping. I mean, when online shopping first began, people were skeptical. When online trading began, people were skeptical. Pretty much, everything is going online, and there aren't that many companies that are still in this game. Why? Because you kind of need scale. Doctors are not going to ally themselves with just 13 other startups. You're going to go to where all the other doctors are. Why? Because, well, this is a regulated environment. It's a very, very sort of like a curated world. You have to fit all kinds of regulations. There's a real cost to running an online healthcare network. And the patients, where are they going to go? Well, they're going to go where all the doctors are. And then all the doctors go approximately where the patients are. So whoever builds the biggest network first has the greatest advantage. In my opinion, in my judgment, that was, the old world, like Teladoc, and then they bought this AI company called Livongo. They still have the largest network that's out there. If somebody wants to build a bigger network, yeah, they got to build a very large computer, accumulate all the entire, all the doctors, and then, get them all to use it, versus Teladoc, which simply kind of needs really like, time to pass for the supply issue to be such an issue that more and more people simply have no choice but to move to online healthcare for not everything. Obviously, you can't do everything online, but there are a lot of things that you can do online. On Mankind Corp, yeah, if you're watching the stock every day, you're going to be disappointed. I mean, stock prices move for a lot of different reasons at all different times, so it's not going to fit, our personal needs for when like we want it up or down, because there are people betting on earnings, there are people betting on conferences, there's buy the rumor, sell the news. People are afraid that China is going to invade Taiwan. They sell everything. You don't know. Attach yourself, I would say, go and look at the results. If the results are going up, there's no likelihood of the company's stock over time not reflecting that value. So I'm still very bullish on Mankind, and on Teladoc. We clearly need a few things. We need growth to restart. We need them to show that they can expand into more and different areas. And in my YouTube video, which in hindsight now looks poorly timed, but the truth is that it's tough to call bottoms. I mean, why? Because the stock price is already low. So like even a fairly small drop is a large percentage decrease. And so of course you look foolish and hey, I've got egg on my face. That's fair enough. Still, have the facts really changed for Teladoc? The stock price has changed. Have they? Not really. I mean, somebody wrote me at ATG Digital and said, poor Teladoc. I'm like, well, they have $1.6 billion in cash. They have debt too, but they also have a business that's generated $80 million in operating cash flow. Yeah, I mean, and they trade for 0.4 times sales. I don't know, like maybe they will sink into the sea, but 0.4 times sales, 80 million, one, if not the largest or one of the largest doctor-patient networks in online health. That's a real asset, plus $1.6 billion in cash. I think at low prices, I'd feel dumb to sell. I'll feel dumb to sell when the stock like moons higher, because all the things I'm telling you today are right. All right. TT says, what timeline should one start investing in Wolfspeed? They completed their huge plant in North Carolina, Virginia area. I understand the plant in North Carolina is operating. I don't know about the one in the Virginia area, truthfully. I mean, Wolfspeed is a bet on EVs. I mean, we are at 6% penetration in the United States on EVs. China has just crossed over in terms of new car sales. I think it's between 50 and 60%. So 6 out of 5, between 5 and 6 or 10 new cars bought in China are EVs. So there is an inevitability to what is going on. I know there are some people that think that EVs are fad, and hey, you can have your opinion. This is my view, but we are going to need a lot of very specific chips for us to turn over, the personal car transportation system over to EVs. And Wolfspeed has made their bet on that. And so we are going to obviously see, this is a cyclical business. Chips are a cyclical business. Cars are a cyclical business. They're going to be big ups and downs. However, we have to go from 6 to, first to 10, 15, 20, 30, and then eventually, 40 or 50, 60%. And they are one of the very few companies that's exclusively focused on EVs and chips for EVs. I mean, this is their exclusive focus. They don't make them for AI. They don't make them for, laptops or smartphones, purely on EVs. So it is going to be up and down. We are, in my judgment, somewhere at or near the bottom of the cycle. You can tell by the fact that the stock prices are low, the sentiment is horrible, and of course people feel terrible, which is, very much the opposite of the computer chip manufacturers, where, they've had a long run from 2016 till about 2022, 2023. Car sales, because of high interest rates, have been doing poorly. Many of the legacy automakers have been struggling to sell their EVs. Even Tesla has had issues. So we have to go to the bottom of the cycle, and then there will be a recovery. If you're trying to catch the perfect low price, which I never recommend anybody do, well, you're probably going to miss it. You might as well just buy as the thing is moving higher. But there's, the timeline is dependent on you. I mean, are you a short-term investor? Are you investing for this adoption curve? We are at 6%. And this is usually where we have on this S-curve adoption, where, we're kind of like here. We're about to probably go to 30% over the next 3 to 5 years. So under that scenario, I mean, at the top, Wolfspeed will be at the next top, cyclical top. There'll be many, a few cycles. Wolfspeed will be gushing cash, have huge growth, etc. So these are all low prices, but I mean, relative to our sensitivity for we don't want to see our accounts down by 5 or 10%. I don't know. I mean, I always say well, at low prices, it's a range, and that range is way, way wider than what anybody thinks. It's not 2 to 3%. It's 30, maybe even 50%. Why? Because, when news is bad, people panic. And, maybe some hedge fund accumulated and thought this quarter is going to be the bottom. And instead, I don't know, redemptions come in. They're like, I want out. Yeah. And they call Goldman Sachs and it was 30% lower. That's done. So at the bottom, these, the range is quite wide. So the best thing is just to buy on days when you least feel like buying, which is the buy slow, buy low sort of mantra. And that's it for the questions today. Just to recount what this live stream is about. Look, everyone measures how they feel about their investments based on such a short time frame, but all the big money is always made over time. If you're checking your accounts every single day and you're looking at Bitcoin, Paul, it was at 74,000 in March, and since then we haven't gone anywhere. Listen, if it was at 80, you wouldn't be selling anyway. I mean, that's the thing. Everyone wants high prices to do what? To do nothing. So, I mean, the basic analysis for Bitcoin, for crypto-related investments is that, in my opinion and in my judgment, and I say that because I've gotten plenty of hate for Paul, you said this and you're wrong, you're a jerk, you're an idiot, you're a fool. And hey, I put myself out there as I get the hate, but I also want to present the opportunity because you know what? We put Bitcoin into the portfolio in March of 2020. And this is after I made my YouTube video saying, hey, this is bottomed out at 3,000. Why? Well, I mean, I would have liked to have put it in earlier, but the truth is that people at Banyan Hill were skeptical. I was a little afraid because, the folks that invested alongside with me were skeptical. And so I waited until it was stable, right? And then what happened? Well, COVID came and smashed it down. In other words, but today at what? 58, 59, 60,000, 3,000, 10,000. Yeah. I mean, to have made 5-6 times your money. Yeah. It's pretty good. But imagine from here, I mean, we're talking about making what? So 10 times would be about 600,000. So 15 times your money. No one's telling you to bet the farm, bet the house, lever everything, but still, if this is right and the facts, the evidence all point the same direction, this is going to be a game changer. This is going to be a game changer. If you're looking for game-changing investments, the silver tier has a number of crypto. Gold tier has both crypto tokens and stocks. including things like MicroStrategy. Diamond tier has crypto tokens, smaller ones, and number of miners. Check into those, because once it happens, well, I mean, you can still make some money, but like those jumps, as I showed you, like in 2017, they just came relentlessly. And you'd be like, I'll wait for a pullback. Nope, $1,000 more. I'll wait for a pullback. Nope, another $2,000 more. So that's the story. That's the Bitcoin live stream for today. Let me see here. Well, you're welcome. And more comments. Thank you all. Thank you all. Yeah, this is something. This is again, this is our human way. I would say, remember, the stock to flow model has been wrong before on the upside. Nobody cared, right? Yeah, it was well above it. Nobody cared. But when it's below it, we care. Why? Because that's the way we experience it. So if Bitcoin had hit $100,000 in the last cycle, maybe the low is not 15, instead it's 30 or 40. So I mean, it does seem like there is a step function jump that happens with every halving, and for my money, like if when the price is well below that stock to flow model, if I was going to buy more, that's where I would go. And if I was going to sell some to take some off the table, I would go when the price is above that stock to flow model indication. What are most people likely to do? The opposite. Why? Because at very high prices, they're persuaded it's going to go to the moon. It's going to go to the moon, and they'll buy more. So the profits are not diminishing. I mean, obviously, you go from 1 to 10, 10 to 100. There's always the same exponent, right? So there's always like an additional exponent. They're diminishing depending on where you start measuring from. And so it's as much a function of what people are measuring, really. So that's what I would tell you. Yeah, I mean, I would use the stock to flow model. In other words, it should have been 100,000. Should have sounds dumb, but I'll sound dumb. It should have been 100,000. The stock to flow model, I think, accurately describes the mathematical price potential for Bitcoin based on its supply characteristics, because human markets are going to be very much driven by, obviously, what's going on in the fiat monetary system, and then our feelings about price around it. It's never going to be like a perfect match. Sometimes it's going to be above, and obviously the last 3 halving cycles, it went above. Nobody has any complaints. This last cycle went under. Oh, it's a terrible model. It's crap, blah, blah. So I would tell you, we're in for a good surprise in the second half of this year and 2025, but you got to be in at low prices. 2017 showed you that it can be incredibly relentless, and where you will hesitate to get in. At current prices, you're just like, I can be later. Anyway, I've gone on and on. Thank you all for attending this live stream. Check out atgdigital.media. $9.99 per month is the silver tier. And with that, I want to say thank you. And this is Paul saying bye.